Okay, guys, this week's podcast, we are live with Brian. Brian, thanks for coming on the show.
Thank you, Rob, for having me.
Yeah, I appreciate it, man. Appreciate it. I know you're very busy. How's your week been?
It's been good. You guys had a great event this past Wednesday. I got home
turnout.
Late.
Great turnout.
And it was a fun time. And
you were feeling kind of good, weren't you?
The next day I was struggling, for sure. Yeah, but it was always a good time at those events.
It is. I'm glad that everybody came this month. I mean, we need a little help getting the word out there. So if y'all are watching this, July 21st, don't miss the next Super Investor Meeting that is back live.
Yeah, it's the power of networking. I mean, that's where you meet all your contacts, your friends.
Exactly.
People that are going to help you through the deals.
Exactly. Hell, there was guys closing deals there this past time. I was impressed. Two guys were talking. It's like, I've got this, and this. Oh, I might be interested. Shoot it to me.
Yeah.
He's like, man, I got the stuff right here. They looked at it right there on their phone. He's like, you know what?
Yeah.
Let's write up a contract.
Pulled up the comps, made an offer on it.
Made an offer on it right then and there.
Yeah, there's a lot of wholesalers.
Yeah, a lot of that right there is amazing to me that's still going on.
We got the matching shirts today, too.
I know. Look.
Hey,
we you know,
I need to get one with the jet.
Who dresses you? Because my wife dresses me.
Mine too.
So I picked out black this morning because I've got several colors, but I picked out. I was like, you know what? You called me last night. He's like, what are you wearing? I was like, I'm going to be the man in black. And
going X Armor.
I was like, you know what? I'm going to be the man in black too. So anyway, Brian.
Yes.
The whole point of this podcast, and I'm sure you've seen it before, we try to help, or I try to help, and the guest try to help people get financial freedom. You know, that's kind of the theme. And how people get started, what it takes to keep yourself motivated. Which last night I did a post about motivation, and we'll talk about that. But what got you your start in real estate? Let's start from the beginning. You were in medical sales, right?
Right. Well, like most people, I was in a job that was very consumed a lot of my time. Didn't have really a whole lot of flexibility, freedom to do what I wanted to do. I had a decent income, but no time to myself. And I started exploring ways to just free myself. And I kept coming across real estate as a way to reduce my overall tax liability against my earned income, but at the same time be one of the only truly passive ways to free yourself from an 8 to 5. And,
the more that I've gotten out of, and this has a military thing to it. Of course, I was in the military. More that I've gotten away from the military, the whole structure of 8 to 5, or really 6 in the morning to 5, and I've gotten out into the civilian world. There's everybody hates working a 9 to 5 job. They hate it. I don't because I love what you do. I love what I do, and I mean I can come and go as I please, but typically you're busy, getting work done. So you were in a 9 to 5 job and just didn't like it.
Yeah, well, I would say 9 to 5. I was up. It was medical device sales, so we had to be in the OR by 7, which meant we had to be at the hospital by 6. Check in, all these things. So it was very demanding as far as being up early, working late. We had trade shows, dinners we had to do with clients. But it was
always I was networking, trying to deal with clients, going into hospitals. Trying to do sales, that's got to be tough.
Right. And I did that for over 15 years. And it was kind of like that quiet desperation where every day I had to put on, a smile, meet the clients, but deep down I wanted out. And that's when I really started going to more events like the one Jet Lending puts on, and started meeting the right contacts at those events.
Okay. So when did you buy your first investment property? And what was it? A flip? Was it a buy and hold? What was it?
Yeah, it was a buy and hold. And it's funny. I joined Lifestyles Unlimited early on. I think 2011.
Yeah.
And I think I didn't buy my first property until 2013. That's how terrified I was of buying a property.
That right there. Me and every guest so far has talked about the fear.
Right.
How'd you overcome that fear?
I had one of their agents call me and he says, Brian, if you don't buy this deal, there's 10 other guys behind you that'll buy it. And I ended up taking the chance on it. We bought it for $85,000. It was Brant Phillips actually did the renovations on it. That's how I met Brant.
Okay. Brant's a good person.
Brant's
a very good guy.
But we ended up, I held that property for about 3 years. sold it, made a great profit, had good tenants based on the training that they gave me.
Mm-hmm.
And that was where I started.
You still own that property?
I sold it.
Okay.
Which is, I should have held on to it.
Yeah. How much you make off the sale?
35,000, I think.
That's not bad.
Yeah. Cash flowed every day.
Not bad. So right now, what would you say, how many properties are you holding right now?
So where I've transitioned myself is I don't necessarily buy and hold anymore.
Okay.
I like more of we do have a few rentals. We have a condo that was inherited, which I never would have bought it, but it was inherited. My original house that I was in, my townhouse, we now lease that out for cash flow. But mainly I like the note side of life, which is like owner financing, things like that, some lending stuff. But that's where a lot of my time and attention. I'll still do a flip.
Yeah.
I'm not afraid of those anymore. Got good help.
Okay.
Good, access to money. So
when you first started out,
mm-hmm.
did it come easy? Did you have to work at it? I mean, what path did you stay on to keep you focused on real estate?
It was books, going to constant events, and going to seminars.
So networking.
Yeah, networking.
So let me ask you a question. Were you sitting behind a computer? Were you waiting on deals to come through, or did you have to actually get out there and work at it a little bit?
Well, I think that's why I joined Lifestyles originally, is I didn't have time to shop for deals. And so part of that program back then was you could just have access to the membership level and they would provide a deal to you.
Okay.
And at that time it was fantastic because I think I bought 3 from them and it worked out well.
Yeah.
But that's where I kind of learned how to manage a property, how to deal with tenants, any issues that you may have with those properties. But that was a good experience.
It was. Now, motivation. We talked about this just a second ago, but I posted this last night, and I can't take credit for it, but it said motivate. Hold on, let me read it off to you.
Yeah.
It says basically motivation is a liar. And I'll explain this to you if you did not see it. Motivation is a lying, untrustworthy emotion that will betray you at the first chance she gets.
It's true.
Motivation will come and go.
Yeah.
Every day you're either motivated to do something or you wake up, oh, I'm not so motivated. I just don't feel like doing it today. But that's an emotion.
Yeah.
I think what most investors, when they are successful and they succeed, is discipline.
Yeah.
The constant getting up and doing it because they're disciplined enough to do it.
Do you follow David Goggins?
I do not.
No,
I do not.
You love him.
Okay.
Yeah. Military background. He's a guy that's he's just in your face raw. Stephen Davis kind of turned me on to him.
I like Steve. I like Steve Davis.
He's good. It's a good book.
Yeah.
I started reading it and watched a bunch of his YouTube videos, but you'll like it. I mean, as far as he's raw.
David Goggins.
David Goggins.
Goggins.
Yeah.
Okay. I'm gonna guys out there, if y'all
check
him out, David Goggins.
Yeah.
So you started off in medical sales. You bought a couple of rentals. Did do some fix and flips. Where do you say at that time? You say, I've had enough doing this. Yeah. I'm going to transition into maybe doing some private. You do private lending, right? I
like that. I like the note side. I mean, I'll do owner financing, which is kind of mortgage notes, which is, it's still lending, but it's more on a long-term basis. But owner financing is nice if you have a property that's got, if you're just trying to create a cash flow stream, but not actually own the asset and have to manage like tenants, it's great.
Okay.
But I realized when I was landlording and I had 4 rental houses that it just wasn't putting off enough income or cash flow to retire me to get me out of my past job. So that's why I was like, I needed to explore other options that could provide more cash flow so I could bounce.
Yeah. Bounce. That's everybody's idea. I'm just going to bounce. I think me and Jason, we talked about this bouncing. He said, Rob, you're never going to bounce. He's like, you're just not going to do it. I think Jason has a good read on people. He has a far better read on people than I thought he did. He said, you're just not going to do it. He's like, you're way too go every day. He's like, if you sat on he's like, you're like me. If you sat on a porch and drank your coffee every morning and had nothing to do, you'd go crazy within a week.
Yeah.
And you know what? I gave a lot of thought to that. And I said, you know what? He's right. I'm never going to bounce.
Well, the good thing is you're in the industry.
You don't have to.
You don't have to bounce. Yeah, this is it. This is the best. I mean, I would, doing medical device sales, that's never going to get you to your end goal.
No.
And, being in real estate, there's so many different avenues you can go down. You can own it, you can flip it, you can hold it, own or finance it. You've got the best part of real estate, I think, figured out is the lending side. I mean, it's a fantastic vehicle to ultimately get you where you want to go.
It is. So. And when I first started out this, of course, I'm retired military, had passive income coming in. I mean, if I wanted to, I could have lived off a fixed income for my entire life and just been happy.
Yeah.
Go do what I want to go do little vacations here and there. I wasn't married at the time. I had the perfect bachelor life. And look, if my wife watches this, I love you to death. No offense. But Alex always says, man, you screwed up the best thing that ever happened to you. He's like, what? He's like, you didn't have to get into lending. You didn't have to do any of this. He said, all you had to do was go get you a job at a gun range, maybe working 2 or 3 days a week, giving you a little bit of income coming in. You didn't have to do anything that you're doing right now. He's like, but you did it. He's like, you screwed up the best thing that everybody wants.
They're all looking for stability and like a long-term
stability, long-term, don't have to work anymore, can go and come as they please. He's like, what's wrong with you? I was like, and I always use this reference. I want more.
Oh yeah.
I want more for me and my everybody has a legacy. I don't think of it as a legacy. I don't think I will ever have a legacy, so to speak. I think if you do good and you live a good life and you try to help people as much as you can, that's your legacy.
Absolutely. Yeah. You'll be remembered for that long after, you're gone.
Yeah. And I think that is the most important thing. But let's get back into discipline a little bit. How disciplined are you on a daily basis? Like what does your day look like?
So I usually, and I wouldn't always like this. I mean, it comes over a period of time when you start reading the right books, right?
Yeah.
And that's why I always like good authors, because they teach you good habits. Good habits can change your life. And so I've always been active. Like in the morning, I'll wake up usually early, go to the gym. That usually sets my mind and my day straight to where I can be successful and function correctly. But I usually, now it's a little different than what I was into back in the day, is because now I'm just whatever's on my desk at this particular time. Maybe it's we're looking at a property to buy. Maybe it's a multifamily unit. Maybe it's a mortgage note. But I'm always trying to see like, how can I further the cash flow that I currently have today? How can I expand on it? Because that's what makes life easier and allows me more free time and flexibility to do things like these.
Yeah. So are you into the multifamily aspect of it?
Mm-hmm.
So Ehab has done that. Ehab.
Yeah,
he has transitioned to that, and he's like, this is far better than single family.
Absolutely.
I see the total benefit to what Ehab's doing. He's making babies.
Yeah.
He is making, as Grant Cardone would say, he is making babies.
He's got a unit right down the street from where I live. It's kind of like OST. He's changing it into an Airbnb. It's right near the Med Center.
Yeah, that's that 18 unit or 11 unit, something like that. He's doing a hell of a rehab on it. I'm going to go by and check it out here pretty soon. The greatest thing about that is that he's got one Airbnb, and forgive me, I'm going to put some numbers out there for you. He made like $18,000 on one property. It's a duplex.
Yeah,
one property.
Yeah,
I mean, it's killing it.
Airbnb, the right location can be amazing.
Even though, and this is what people don't realize, that they're like, oh, I had an Airbnb and it failed. Well, it failed. But why did it fail? You have to look at the parameters around an Airbnb. One, is it near an attraction?
Right.
Med Center, people, and Ehab, the one that I'm speaking about, he has one. It's got a pool. It's next to the MD Anderson. People come down, they get their medical treatments. And it's a nice place to go relax instead of going back to a slimy hotel. No offense to hotels, there's some really nice one out there, but some of them are just don't have that home feeling,
Right.
But and the one of them's he's got a pool right there in the backyard. You come rent it, you feel more at home.
Oh,
So
yeah.
I mean that Airbnb model is really growing.
We have a friend. He buys these. He buys houses, maybe $80,000, puts 40 into them. They're pretty small houses off of like OST and Yellowstone, not necessarily the greatest neighborhoods, but he makes them really cozy, secures the heck out of these properties where somebody could come in and visit, say their mother's getting, cancer treatments or whatnot. They can stay there for a month sometimes. And he's cash flowing these little houses over $4,000 or $5,000 a month. Yeah. And whereas a single tenant, you'd only get maybe $800, $900 a month for rent, but he has these like cool Houston things inside the house.
Well, Jabbar, do you know?
Yeah.
Jabbar, they're doing that. That hotel. They just redid that hotel. I know it's not an Airbnb model, but they've got it to where you can lease those out for a long period of times as well. And that's a pretty cool thing that they did down there.
It's nice. I don't know what that mural cost, but man,
it is nice. We went and looked at it. I mean, this thing got a little retro feel to it, but it was pretty
beautiful.
Nice. It's beautiful. Yeah. So what else do you do? What do you do for fun?
I'll tell you. I'll share with you how this even came to be, and it's a decent story. So I was in medical device for 15 years, and a competing company came in and just bought. We had a contract to sell a product. I didn't design anything, create anything. I had a contract to sell a product.
Okay.
The company that designed that product was acquired by a large manufacturer. Like you've heard of Stryker, J&J, all those big companies. So it was purchased, and they came in and they gave us an ultimatum. They said, "Hey, we can either, basically give you a payment to just walk away, or we can just release you, fire you, right?" And so our agreement.
That's always good news.
Yeah, it's always we can. So the arrangement was they were going to pay us, but they were going to keep us on for at least 3 years for our relationships, which we did. And then once I was out of that, the industry had changed so much from when I got into it. It just no longer was exciting. There was a lot of politics from the hospital standpoint. I just wanted out. I wanted time and freedom. So I took what they paid me, and I immediately went to my what anybody else would normally do. I put it in the stock market.
Yeah. Right.
I did have some rentals at that time. I ended up selling them, but I went back to the stock market. And like I share with a lot of people, I lost about $1 million inside of 3 months.
Oh,
and
that's got to be. Some people walk away from that.
It was I didn't sell it. I was pretty much I was committed to it. So I had to I put it into some kind of bond, thinking I could get some cash flow from it. The value of the bond dropped, and I had to wait for things to slowly get back to where I had purchased it at, and then I liquidated everything. And just so happened to be at that particular time, I went to a networking event where somebody was like, "Hey, you need to explore notes, mortgage notes, a little bit of private lending, right?" And I was like, "Okay." And he's like, "You need cash flow because I had a high income job and I left it. So now I have pretty sizable amount of money on paper, but no cash flow."
Yeah.
And that's most of America. Like my dad had he worked for an equities company, and there's high net worth individuals, 5 million, 10 million, who have no cash flow. So he's like, and that's normal.
It's funny. That is normal. And no offense to anybody, Ehab is a very good friend of mine, and we talk a lot. He's a little bit of a mentor to me, and sometimes we mentor each other. But he's more of a mentor to me because he was my very first client. So, after 6 years, we've done a lot of deals together. We have lunch on a regular basis. I help him out in any way I can. I try to help grow his business. Yesterday at Jason's grand opening, he was sitting there. He looked at me. He's like, "Rob, when are you going to do an investment property?" He's like, "I keep asking you this." I was like, I had one. I didn't like it. I was like, I had a rental. I didn't like that rental space. I didn't.
Yeah.
The reason why is because my wife and I sat down and I figured it out last night. Actually, my wife loved that house because it was hers.
Right.
It was her baby. So she got emotional about it. And then I see her hurting about what was going on. And we had a bad renter. I mean, she was only bad up until the end. And she basically threatened us and all this other stuff. And I'm like, look, we never, it was just a bad deal.
Sure.
Okay. We never agreed to go month to month. And it was a bad, so it put a bad taste in her mouth. So now I'm like, you know what? That's why. It's because the emotions behind it.
Mm-hmm.
If you have a property that you never lived in, I think if you take the emotions out of it,
sure,
that I think I'm going to have to delve back into that and say, you know, I've got to get something up to a point of, I'm not going to be able to sit here at 60 years old and close loans. I mean, you know, something's going to have to give, and I'm going to need some passive income coming in as well. Yeah. Now we're doing great as far as savings. You know, we've got plenty of savings. We've got plenty of money in the bank. You know, we're doing good at that aspect. But as far as, you know,
that's what's here. Me going back to what I originally said is, you have one of the most valuable skill sets I wish I would have learned 15 years ago is how to underwrite properly a loan and secure the money to the asset, the collateral. That's gold.
Oh, yeah.
You know, single family is great. I would still do a single family for cash flow. You know, learning the note side, learning how to underwrite a multifamily deal to make sure that whoever's running it or managing the property is doing it correctly. Mm-hmm. When they submit you the offering, you know, they're going to basically say this thing's going to return 5 to 8% cash on cash each year with an overall net return of 15% per year. Mm-hmm. But how do you got to educate yourself to read these memorandums, read the financials every quarter that are submitted. But these are all things that spit off cash flow that can, in addition to what you're making income wise, salary wise, whatever, it's just, you're just stacking more cash at the end of the quarter. Mm-hmm. So like savings, like this is one of the things that I was taught or woke my eyes up. When I was a Lifestyles member, I paid my house off free and clear. I was like 31 or whatever. And I was so excited. Like
worst thing you could have done.
Worst thing. Yeah. They're like, that's the dumbest thing.
That's the dumbest thing you could have done.
I didn't know.
But you know what? To me, and I'm sitting here thinking about it myself. I told my wife this. I was like, you know, by 50, we could have this house paid off. And she's like, let's do it. And I'm like, yeah, let's do it. To me, it can go both ways. You know, yes. Can it be a hindrance because you can take that money and put it into properties that are going to make you more money than paying off your house? Right. Or B, you can go the safe route. Now, this is the safe route that I'm going to talk about. You can pay off your house and you have no debt and you're completely debt free, but you're not making any money. Right. There's nothing coming in. You just got it going out. So you got nothing to show for. And that right there, you got to put your money to where it's working for you. Absolutely. And that's what I'm trying to get over the bad taste and the fear. Yeah. I mean, sometimes you hit and it's a great hit. Sometimes you hit and you ended up with a bad taste. And I think that's what we try to do at Jet Lending better than anybody else is. I'll give you a prime example. Somebody that 3% to make 100K. Yeah. Somebody commented in there to that post that I did. I know Tony. He's a great guy. He's saying, you know, the foreclosure rate on new investors is so high. Blah blah blah. This. I was like, well, probably the reason why is because they shouldn't have been in that deal in the first place. Yeah. Wilder Lopez, if you're watching this, I hope you thank me for the conversation we had last weekend. There's a house. The owner is practically going to give it away. Give it away. A lot away, yeah. The dirt alone is worth, I don't know, maybe 25, 30. It's going to give it away for like $5,000. Of course you take that down. Absolutely. No, you would not take this house down. Why? Because it's in a flood zone. No, it's in a flood zone. And it needs to be raised about 4 to 5 inches. We're talking about $100,000 worth of work just to raise the entire house. Gotcha. The foundation is level with the ground. Okay. So there's foundation, top of the foundation, ground. So, I mean, every time it floods or every time it gets a rain, it's going in this house. So Wilder calls me last weekend, and I'm name dropping. Sorry, I'm going to. He calls me last weekend. I'm out of town. And as soon as I saw his phone, I was like, I've got to talk to this guy. So I go up on a hill out in the middle of nowhere. I'm at I'm at my dad's house, and there's no cell phone service. So I start walking towards this hill because I know that's the only place. And I just sit down and I just start talking. I say, Wilder, look, man. He's like, well, yeah, but he's giving it to me for nothing. I was like, he just wants it off his hands. I was like, listen to what he's saying.
Yeah.
He just wants it off his hands. Why do you want to take something off of somebody else's hands? He's dumping it for nothing. You're going to end up with a headache.
Yeah.
And at the end of the day, you're probably not going to get through that rehab. It does me no good to tell him that.
Do you think you could sell it as a detention pond for the city?
That's probably scrape it, put a pond
Put
in
a
there,
pond in there, sell it,
and sell it back to the city.
Highest and best use. That's all it is.
There you go. And hopefully he's like sitting back going, that's some of the best investments are the ones you don't do.
That you pass on.
That you pass on because it saves you a ton of money in the long run. Yeah, he could have paid. I think the final thing he was going to pay was like $5,000 or $10,000. I can't exactly remember, but his original start point was $71,000.
Insane, yeah.
And he came down to $5,000. That tells me right there, no, you don't want this deal.
Yeah,
you're going to be cash poor going into this thing, and you're not going to make any money off of this when it's all said and done.
That's true.
Because somebody's going to look at it and say, okay, you had to raise a foundation because you're going to have to disclose all this stuff. You had to do this. You had to do that. How many times is it flooded? Are you going to sell it, or is it going to become a rental?
Is it vacant land or a house?
It's a house.
Oh, no shit.
It's a house.
I didn't know that. Okay, I thought it was a vacant land.
Yeah. I mean, somebody that's got plenty of cash that could go in there and do it. And
is it slab or pier and beam?
It's slab.
Oh, yeah.
Slab.
Yeah.
All right, anyway, hopefully he's watching this and he's saying, you know what, thanks.
Yeah.
Thank you.
Saved me.
He saved me. So you got started.
Yeah, so it was basically I needed cash flow. So I looked decent on paper from an asset standpoint, but I just had no cash flow. And that was the real challenge and trying to match what I was making in medical device sales. And I met a lot of good people that were in that space. Eddie Speed, Eddie Gant, all of these guys who have a different aspect on
Eddie Gant.
Eddie Gant, Eddie, biggest lender in Texas.
He is.
Yeah.
He is. I think I've heard that name from time to time. I see him every so often.
But there's a lot of guys that have like a lot of proproperties where they're just owner. They say they owned them and they owner financed them out. And I started looking at multifamily deals because, like Ehab said, if you want to be a limited partner and be a truly passive. That's about as passive as you can get is notes, lending, multifamily space where somebody else is doing all the work and they're just reporting to you how it's performing.
Yeah.
Landlording is work, flipping's active, all that's active.
Yeah.
So
but multifamily, you can sit back, you can have a property manager on site working, making it work for you, and all you're doing back is collecting that money,
collecting the cash. And like sponsors are the guys who put the deal together, right? And they're deserving of their fees that they charge the overall syndication, right? But once you get beyond, like, say, 80 doors is kind of the sweet spot where it pays for a manager, on-site management, leasing agent, this professional staff to make sure this thing is run correctly. That's a good number to be at in multifamily. Anything under that, you're going to have some involvement with.
So let's talk about transition.
Yeah.
A lot of people want to start off in multifamily. I'm going to ask you a direct question. Do you think if you're a first-time investor that you should be starting off in multifamily?
How much cash you got?
Let's say $50,000.
I think it's wise to educate yourself first on multifamily.
Okay.
I'm not afraid of doing now knowing what I know.
You're not afraid now.
Right. It's the natural progression of the real estate investor.
Okay.
Single family first. Now I got my hands around this. I understand a single family house. Then they get into maybe a duplex, triplex, quadplex into their first truly multifamily unit. But it's really not that. I think it's easier now that knowing what I know to get into multifamily than do a single family house. But you're right.
Okay.
Most people go down what everybody else goes down, single family road.
Okay. But the question is, like, and I'm going to ask another question. Have you ever done any new construction?
I have.
You have? How many have you done?
My own house.
Your own house? You built it yourself?
Well, I mean, I was overseeing it, but
Okay.
I had help from Curtis,
Okay.
some other guys. So
Do you think that you're capable of going out and doing a new construction by yourself right now?
I wouldn't want to. No.
Why not?
A lot of involvement. I can't stand the city. Sorry, if anybody from the city of Houston's watching, they make your life really hard.
They do.
For me.
They do.
But I mean, I know that people that are in that trade, like Curtis, can go down to the city, just meet with somebody and take care of a problem.
Mhm.
Me being a one-off guy, you know, it takes me weeks to get a meeting with the city.
Yeah.
So he's, you know, I would much rather hire somebody like a Curtis to do my house than say, you know, but I built that my property by myself with their assistance. I wanted to go through it and see it.
Yeah.
And I don't want to do it ever again.
So I had a little bit, of course, my one was a Lennar build, but they did not know who they were messing with when I signed the contract.
Oh yeah,
because
you were up it.
I was. They had no clue who they were, and I knew everything.
Yeah.
And there's some details that I kind of let slip, but I knew I could get them fixed myself. We were just excited they delayed our house really, but I had a real hands-on approach about it. And they were like, how do you know this stuff? I was like, it's not important how I know it. It's just, you're not doing this right. And they're like, you're absolutely right. I'm not doing this right. And they were like, well, we got to fix this.
Yeah.
And
anyway, you were on them. Yeah.
Oh, I was. But I even what I know and seeing the pictures that I know, there's no way I would jump into a new build.
Yeah.
No way.
Yeah.
It takes experience, lots of experience, to be able to even get funded for those. And a lot of people don't. A lot of clients, they just want to jump straight into a new build. And my first question I ask them was, "How many have you done?"
Yeah.
And they're like, "None." I was like, "You need to slow down a little bit.
Yeah.
Let's talk."
Take an apprenticeship with like an actual builder for 2 years, and then see if you want to. Do it.
Just walk through one of them with them,
right.
You know, and see if you want to do it. There's a lot of stuff that goes into permitting, that goes into dealing with the city, like you said.
Yeah.
That's a headache. And if you don't have that piece figured out, you're going to have a hard time. Let's see here. This is so new builds are easy. What do you want to bet who that is?
It's got to be Curtis.
That's got to be.
It's got to be Curtis.
That has got to be Curtis. Curtis, of course, it's easy for you because you do it for a living.
That's okay? Curtis. He just posted them swiping left on you today.
We appreciate you, Curtis, for swiping left on Brian today. I'm gonna swipe right on Brian, okay? Because he's wearing a black shirt. I'm wearing a black shirt, and hey,
that's right. Looks good on camera.
It does look good on camera. So
we just gave kudos to Curtis on his. He helped me out a ton when I got started.
Yeah,
he was actually really instrumental in me, getting into. We did our first flip together. I rode with them pretty much every day for like a year and a half, I think.
Curtis, I will tell you this. Curtis does know his stuff.
Yeah.
We've done a couple of deals in conjunction with him being the primary GC on it, and he does fantastic work.
Oh yeah.
And he's done some stuff for Rich Drake that I want Curtis to eventually come to my house and do. But I've got to get him to come take a look at it, see what we could do. It's like this open glass that looks amazing. It does. It looks amazing. Yeah. I've seen pictures of it only, but Rich says he loves it. Curtis does good work.
Yeah,
he does.
Curtis, well, the part of the things that not a lot of people know is Curtis requires that he moves into your house during the construction phase. So he's going to live in your guest room. So if that's going to be a problem. That's one of the things you got to live with, though.
Well, that I could see. I could handle it. Yeah. My wife, on the other hand, may have Curtis. Sorry, we may have a problem here.
Sorry.
What if I just set up my camper out front? Does that count?
He'll be fine with that.
He'll be fine with that. Okay. All right. Well, eventually I want Curtis to come out to the house and take a look at what I want to do, because we have this beautiful pool, and from the inside of the house you can't see it.
Yeah, I've seen your house. It's awesome. Yeah.
Yeah, you just can't see the pool. Like you can't see the view. It's got a very I walk around. I'm not okay. I'm gonna put that up. This is Curtis Warden, everybody.
Curtis Warden here.
I walk around all day in my underwear, and so he's out in his underwear. And say, hey, look, you got you, that doesn't measure out right.
That's right.
But yeah, Curtis does our podcast, our game day podcast. He knows his stuff.
Oh, yeah.
He does.
Yeah, he's helped a lot of people get in the game.
He has.
I've made a lot of good relationships through him. Some of good realtor on the Heights. He owns Brooksmith, and so great realtors in that area that he's introduced me to. His contractors are fantastic.
It's amazing who you meet in this industry, the different personalities, the different people. And I focused my first 3 years of lending. I focused my first 3 years on building clientele. Now I'm starting to focus on what can I do to help those clientele a little bit more, help anybody a little bit more. I mean, Alex Buriak, I would consider him one of my best friends.
Yeah.
He may not think so, and he was probably watching this and probably like, why is he mentioning my name? I don't even like Rob. But I would consider him probably one of my best friends. And this is going to transition to like health and fitness a little bit. He's helped me, throughout, my whole career here. As far as, he will drill it. You've got to do this. You got to do this. And I never listened because I was like, oh, whatever, Alex, you're out of medical, blah, blah, blah. Finally, I had a situation where I was like, okay, I've got to do something, I've got to, and literally we sat down, we developed a plan, and I stuck to that plan. He's on the same plan. Dude, we've lost tons of weight together. Yeah,
you guys look totally different.
Yeah, totally different. I showed you a picture in the office of it. Back in December, I looked like freaking Santa Claus.
Right. Yeah. And between the two of you, how much have you lost?
I've lost 40, and I think he's lost 20.
That's incredible.
So together, we've lost about 60 pounds. Let's see here. We got a question. Looking into land to build rentals. These out-of-town shifts are desperate for places to live/rent. You want to take that one?
Looking into land to build rentals. Yeah.
Where are you looking? Where are you looking to at your land to buy your land? That would be the question I've got.
Yeah. What's the land cost?
Yeah.
Build cost. What's the rental cost?
Yeah. How much? First question I'm gonna ask: how many new builds have you done? And where are you looking to get your land?
There are people building multifamily space, in Houston. What do you say?
Let's see here. I have 12,000 square feet for sale, and the Heights perfect for a rental, $600K. Oh, hey, we may have to get you in touch with some people, because I guarantee you, there's somebody. If you got 1,200 square feet in the Heights, I guarantee you, I know some people right now that are probably watching this that are going, I need that guy's information.
Yeah, they're
Winnie,
Texas.
Winnie, Texas. I don't know much about Winnie, Texas.
Yeah, I don't know. Houston.
Huh? Yeah, Houston. I would say first you need to have some experience with new builds. If that's the case, then yeah, you need to definitely look into that.
Yeah, it's hard to answer a question based on not having all the information, but I mean, there's always a circumstance for anything if it makes sense financially.
Yeah, Rob has a product construction to rent products. Talk to him. Yeah, give me a call. Let's talk after this, okay? Because I'm not exactly clear on your question, but would love to talk to you after this, okay? No new build. We have we have homes built from ground up, new construction for Perry Homes. Okay. Yeah, let's talk after this. Let's see what you need. Just give me a call, 903-806-4400. So back onto the health and fitness. What do you do? You play soccer, right?
Play soccer. I try to just eat clean. We have a lady that prepares our meals for us.
Yeah, talk to me about that a little bit.
Yeah, so her company's called the Texas Fit Foods.
Mm-hmm.
Her name's Crystal Hutton. But like a lot of people who don't have a lot of time, I hate to cook.
I love to cook on the weekends. My wife meal preps. She loves to. I don't know if she loves to cook or not. She says she does. I mean, she spends a lot of time doing it. But I talk about it. Yeah, go ahead. Talk about
it's
it.
Just proportion meals. They have, I think, a 6 ounce and a 10 ounce or 8 ounce. I can't remember what the sizes are. But she delivers them to your front door. Mm-hmm. So every single week on Sunday, you'll have a delivery, or Sunday to Monday. And usually for 8 meals, I'll pay her $12.50 a meal. That comes out to $100, and I usually pay her a delivery fee.
Okay.
But it saves me from the week of having those urges to eat poor foods, bad foods. I mean, I'm going out every time I go out to eat anyway. I'm sure you feel the same way. You're dropping $100. Oh yeah, easy. Like go to Papacitos, $150. I mean,
that's. I went to lunch to Papacitos with some clients. I picked up the tab. There's 3 of us just for lunch. $125, and I'm like, Lord have mercy.
Yeah, and those meals come every single week. I tip her $150, and that supplies me the entire week.
Okay.
So I eat 2 meals a day, and then every now and then I'll have a meal out. But for the most part, I get 8 meals a week.
Okay. Now, are you only eating 2 meals a day, or are you?
Yes.
That's it.
I mean, I don't. I know it's probably terrible, but I just don't.
Any protein shakes, anything like that?
Sometimes after I work out in the morning, I'll do a protein shake.
Okay.
Yeah.
But so this is, somebody put this in perspective for me. Eat clean, first of all.
Sure.
You've got to eat the right things at the right times. I do a 16-hour fast all the way till noon. I don't eat anything until noon. There's plenty of studies that show that it decreases cortisol levels during that time. And but when you do eat, you've got to make sure you're eating the right things that keep you healthy.
Right.
Guys, motivation, talking about motivation, if you feel sluggish every day because of the food you eat, that motivation is never going to come.
All right.
That's why that's why discipline's the more important thing. You've got to stay on the right path and eat the right things so that you can stay motivated to get up and go to work and get up and go do things and get all that stuff figured out.
Yeah, you'll see a guy that, and you see this all the time. I think Tony Robbins talks about this, where you'll have a guy, he's overweight, he pulls up in a Lamborghini, he has everything in the world, materialism. It looks like he's got the pretty lady that's married to him, but he doesn't have his health under control. Yeah. And he's like, what's the point of having all these extra things around you when you can't even get your health is the most valuable thing.
And you're 1 foot in the grave and don't even know it.
Right.
Yeah. No, I mean, there's plenty of healthy people that look healthy that really aren't. Yeah. I mean, they aren't. Yeah. I mean, it can go both ways.
Right.
Health is literally, what are your labs saying? What are your hormones saying? What is this saying? And then the other side of health is when you feel healthy, your mind's healthy, so you're able to stay focused on growing your business, growing everything to make yourself better and make other people around you better.
Sure.
So I mean that's an important thing.
Absolutely.
So what else you got going on?
And that's it. Let's going back to where other people, we're talking about how other people can, cash flow is such a key component on anybody freeing themselves out of whatever. And I always look at everything from a game of interest rates, either on what your debt is, what your, what liabilities you may have, whether it be a car payment, credit card payment, and then versus like what your mortgage may be. I always look at what can my money earn at what rate versus what are my liabilities, whatever that rate is. So I'm always constantly looking to reduce whatever I'm borrowing, right? Say like I'm borrowing usually I'll borrow to make money.
Yes.
I never,
That's the right kind of debt.
Right.
Then the wrong kind of debt is having expensive car notes that last you 5-6 years. Right. And I'm preaching to myself because I love cars, but but continue.
No, what's so funny is I used to be really against borrowing on cars, right? Like, so like, financing on cars now, it's like 2.9, 1.9, something like that. And so like, we had this dilemma whenever I was buying my new car is, I could easily just scratch a check, pay for cash. But I was like, you know what? I know I can earn more on that $70,000 here. Why don't I just borrow theirs at 2?
Yeah. I mean, it's cheap. If you can get it at 2, maybe, even 3.
Right.
Look, if you're going to borrow money and it's at 6 or 7%, first of all, you're borrowing at the wrong percent. Okay. And I know that's probably, y'all are like, that's crazy.
Yeah.
But these dealerships will do that to you.
Well, and that's the thing. Like, it's really important. If you're going to be in real estate long term, you want to. This is what I always tell everybody when I'm trying to help them out with whatever situation they're going through, is you got to look really strong on paper from a financial standpoint. You got to have good credit. You have to have some cash in the bank from a reserve standpoint, because banks, once they know that you don't necessarily need them, they will lend you money for days.
Yeah.
They will try to give you more than what you really need, and so that's why it's like having a good credit score of close to 800 or over 800 is really, really key to getting the best terms possible in financing, whether it be a car, a house, a loan, right?
Yeah.
Because if you're in real estate,
if you're bankable,
yeah,
it's a lot easier to get your money being bankable than it is getting your money and not be bankable.
Right. Yeah.
And we look at that. I mean, if you've got 100K in the bank, and you've got 800 credit score, and you've done 6-7 deals, I mean, we look at that all day long and say, we're that's favorable. We want those type of clients.
Yeah.
Now, not to say that we don't want every client. We want every client. We'll help the newer investors build their credit and build up to where they've got that kind of cash flow. I mean, there's nothing against that whatsoever.
Right.
But yeah, I can walk in a bank right now. My wife is just amazed. I can walk in a bank right now and say, I need $20,000.
They treat you totally different too. Whenever they, it's really interesting. They'll invite you back to their office, the glass, and say, hey, like this is. Do you need anything? Can we do anything else for you?
Who do you bank with?
I'm with Chase now, but a lot of like the other lines of credit I have are with I have credit unions. I use a lot of.
I love credit unions.
I like them.
I like building those relationships. Relationships are the most important thing in any real estate industry, or any relationships, building those relationships. I love credit unions. Because they work there. Chase, you may have
New York.
Yeah, you may have a new guy in there every 5 months. I've done my time at this branch. I'm going to move up to a bigger branch. It's so corporate structured. So when you walk in, hey, I was dealing with Eric. Eric doesn't work here anymore.
Yeah, he's gone.
He's moved up. I want people at credit unions that have been there for 20 years, and they're still doing exactly what they were doing. Now they might move up inside the bank, but they're still there. I love credit unions.
Yeah, and it's important because it's going to help you move along. I mean, usually when people get involved in real estate, you either have to have money or credit. That's why they say partner with somebody if you have bad credit who's got money, or vice versa. But it's really important long term to have. If you really want to be successful in this business, you got to look as sexy as possible on paper.
Yeah, sexiest. I like it. Sexy. I'm not very sexy. I'm not very.
I'll tell you, on paper.
I'm on paper though.
On paper,
I'm very sexy, but in person, That's interesting you said that, because I've got a client. I'm not going to mention her name. We're doing a 18-unit 30-year loan. Commercial loan. She's not great on paper. She's not. But she's like, Rob, I need your help. I was like, okay, go get a credit partner. Form an LLC. You're going to buy this 18 unit. It's a straight 100% occupied. Buying an 18 unit. I was like, go get you a credit partner. Put him on your LLC together, and then we'll close it out.
Yeah.
She's like, you can do that? I was like, yeah. You're just not going to sign a personal guarantee.
Right.
Your credit partner will.
Right. And
so she's like, there's no way. We're both in LLC. Just trust me, okay?
Right.
She goes and does it. We ordered the appraisal. They, of course, pull credit on both the people, both the members of the LLC. I call her. They called me up and said who we're underwriting it with, and they said, hey, she can't be on the loan. I said, okay.
Yeah.
He said, but we're ordering the appraisal. The other guy's good.
Yeah.
I was like, okay. I already knew it was going to happen.
Right.
Guys, I'm telling you this right now. If you want to get into 30-year holds, form an LLC with a credit partner that's got good credit, and you can be a part of that LLC, just not sign the personal guarantee.
Good.
And I'm making that happen for people all day, every day.
Right.
But it's, eventually it's got to be somebody you trust.
Sure.
You don't want to just go pick some random credit guy that's going to screw you out of the deal. It's got to be somebody you trust. Now, your operating agreement is going to say, hey, we're equal partnerships in this. Right. I'm just not going to be able to sign the personal guarantee.
Right.
So that way, when it goes to, if it ever got to litigation, you'd have some sort of protection there.
Yeah. And if the deal is ever really a good deal, it's not going to be hard to find money or somebody that wants to partner on a deal if the deal is truly a good deal.
If it's a good deal, and especially a multi-unit.
Oh yeah.
Who wouldn't want to jump into
fully stabilized
18 unit, no rehab needed? She was like, I really want this. I was like, let's make it happen.
Yeah.
This is the one thing that I will tell you about jet lending or any lending. There's ways, if it's not a conventional lending, there's ways to make any deal happen.
Oh yeah.
Any deal, if it's a viable deal.
Right.
If a lender is telling you, hey, you might want to step away from this, please listen to them. Please.
Right. If they're looking at it, I don't see what you see.
I don't see what you see.
Yeah.
It's not, look, and I say this every single time I talk to people. It's not that I don't want you to close on that deal. I'm not against you. I promise you. You have to look at it from our perspective and say, well, hell, if they're passing on, there might be something wrong with this.
Yeah.
We want investors, and especially if you're working with jet lending, I want investors that are doing great deals, that are making money. That way, guess what they're going to do?
Come back.
They're going to come back.
Right.
I do not want an investor that's going to bust out on their first deal, end up in the poorhouse, shouldn't have been in the investment property in the first place.
Mm-hmm.
And now we have to start all the way over. And by the way, you're going to end up with that bad taste in your mouth like I did.
Right.
And you're out.
Yeah.
I'll find other ways to go make my money.
Yeah.
The most stable, I'll put it in the stock market instead.
Which is it?
Well, hey.
Might as well just gamble it.
You might as well just go to Vegas and put every bit of it on black and just
take the gamble.
Roll a dice.
Yeah, it's unpredictable for sure.
Yeah, right now there's people that are panicking.
Yeah.
Especially in the stock market. It was a bull market for how long? And
yeah, and another thing that's funny is my mom. Most people are taught everything you've ever worked for, save it and put it into the market, or give it to a financial advisor
and let them do it for you,
and let them fee you to death.
Yeah,
right, slowly, and they'll try to make you a return. But imagine having that anxiety level. Like if you're waking up every single day, logging into Yahoo Finance, and like, am I richer or poorer today?
I'm gonna give y'all a perfect example. Now I might delve into this again, but Coinbase, 4 years ago, I put $1,000 in. I have $415. Okay, it was on a roller coaster up. I got my $1,000 back, and I said, "Oh, it's gonna keep going. It's gonna keep going." It's $1,000. It's not a lot of money.
Right.
It got up to 1,025, and slowly tick, 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 tick overnight.
Right.
Now it's back down to where I'm not gonna make any money. So hopefully the coin thing will go back up.
Yeah.
The most stable market is real estate, because if there's a correction, it's a very little correction.
Right. I would say real estate is the most forgiving asset class.
Yes.
Because, if you get into a flip, let's just say, and the finishes aren't right, or let's just say a property that's got some kind of weird thing on it, like it's a weird location, maybe it's got it's a 5-1, one bathroom for a 5. Let's just say it's just weird. You can owner finance that out. Somebody else will gladly take get a payment stream, start making payments to you. You can, if you can't sell it at a retail level, the owner financing is a very forgiving way to get out of it, to exit out of a property.
There's multiple ways to get out of a property.
Absolutely.
Or get yourself out of a bad situation, or what's the word I want to look for? Stabilize it till you recoup your money.
Right. And also you can, if all your cash is tied up into that, go refi it out.
Mm-hmm.
Keep it, rent it.
And you can't do that. If you put it in the stock market, you lose and you lose big.
Right.
It's gone.
It's gone.
It's gone.
Yeah. What do you have to show? What collateral do you have against a stock certificate?
It's like Matthew McConaughey. It's not real. It's
not real.
Fugazi.
Fugazi.
It's not on the elemental chart. I love that movie.
It's great.
I love that movie. It's such a good movie.
It's true.
It is true, but it also goes to show you about how crooked.
Oh yeah, the whole industry.
Industry is. I mean, those guys, they don't care about your money.
Yeah,
they don't care, and that's one thing in real estate that has totally blown my mind throughout the whole industry. Everybody wants to try to help the other person come up in real estate.
Yeah, good. They share good contacts.
Yeah, because it's not like a secret society to where, oh no, you can't come in.
Right.
You know, it's everybody's trying to help each other, which is kind of like the military was.
Mm-hmm.
You know, everybody tries to help each other accomplish a goal, you know, and if you win, I win.
Right.
Especially if you're a flipper or lender or private lender. I mean, hey, you do something I can't do. So I may have a client that, you know, has something I can't do, turf them over to you.
Yeah.
And vice versa.
Right.
Say, hey, Rob, this is too rich for me. It's not something I do. Boom, here, call this guy.
Yeah.
And it's an industry that is very forgiving and very friendly and very let's help everybody succeed.
I agree completely. Yeah, and we didn't get that with our. I mean, you were in the military, but like in medical device.
Oh, I know. Competition.
It's terrible.
It's competition.
So, I mean,
especially in sales. Now, I mean, you know, in the office we have a little inner competition, but that's okay. I mean, I still want all my guys to succeed. I want all of my loan officers to succeed as best as they can. Of course, you know, there's always a little friendly competition between each other, but you know, it's good for the blood.
Absolutely.
You know, but that's just sales. You know, but when you're out there and you've got another guy that's in your same industry, maybe for a different company, that's hard.
Yeah,
and you've got to stay on top of your game every single day because. But in real estate, it's not like that, you know. Like
it's open ideas.
It's open to feeding ideas, helping everybody, and you know, building those relationships, and that's a great thing.
Yeah, like kind of like, you know, yesterday when we had like the opening of anybody's building, right? Like we had you have people that may have some type of similar, maybe they have a similar style of product, whatever, but. Everybody knows everybody in our industry, right? We have multiple title companies, multiple insurance, some lenders in that building.
Multiple lenders.
But it's everybody's got a different product within their own company to where it makes sense not to try to box them out.
Yeah.
You know, and because you never know when this person's going to need you on this project, and you know, you can refer somebody. You know?
Hey, I'll be the first to say this: there's hard money lenders out there that send me business.
Yeah, and
vice versa. Like, I mean, there's not a lot. But there's times when people say, hey, I can't do this deal. It's not there's some lenders that have a box that they fit in.
Sure.
And they say, hey, call Rob.
Yeah.
And it's the same with me. Like, hey, I can't do this.
Right.
Jet Lending doesn't underwrite this. Call this person. They do this. I mean, there's not a lot that we can't do. But, you know, it's all about feeding each other. And look, guys, if you're new in real estate, the most important thing you've got to remember, relationships come first.
Absolutely.
It's like a brand new baby. You got to build it up,
right,
and teach it the right thing. And when you build those relationships, eventually everything will come back to feed you good stuff. Put good stuff out. Hopefully, good stuff comes back.
Absolutely.
So hey, that just about does it.
Yeah,
we can sit here and talk forever, but I think that's it.
An hour goes by fast.
I wonder if Curtis is still watching.
Oh, you know he's watching.
Is he still in his underwear?
He's still in his underwear.
Having his morning coffee.
That's right.
I'm going to Astros game later.
That's true.
I'm going to Astros game later. You want to come?
Who did I offend today?
Who did I offend today? My list is long but distinguished.
That's right. That's right.
Just kidding, Curtis. We love you, brother. Hey, thanks for coming on the show.
Thank you so much. Absolutely.
Guys, next week, Alex Cedillo will be here. Same time, same bat channel next Friday. Remember, RSVP. If you need an RSVP for the new Super Investor meeting, and you are watching this, please let us know, and we will get you an RSVP for next month on July 21st. Again, always you can call me. I'm the director of loan operations here at Jet Lending. Brian, thank you again for coming on.
All right,
if y'all ever need Brian's help, how can they reach you?
Just email me. It's better. I used to give out my cell phone. It's just Brian. My full name, Brian, BRIAN, at MRTXRE.com.
MRTXRE.com. Guys, that's going to take all the time that we have for this week. We both got to get to work. I've got to get to work. My phone was blowing up.
Your phone. I've never seen a phone go off more than.
I know, right?
100 missed calls.
100. Look, let's see how many we got. We got 34 missed calls.
Yeah,
in an hour, guys. 34 missed calls.
Mine's just my mom.
All right, guys. Thanks.
That was an